Hello guys, glad to have you on board again today. Later we're going to take care of the podcast about scalping. I'll send you a notification like half an hour before we get it going. Still, I wanted to make quite an update about just the cryptocurrencies, especially Bitcoins. Because actually this is all about it. So I'm not meaning, I don't even mean to scare you out or whatever this is. All right, this is clearly has been going wrong with my scenario. I tried a selling entry yesterday, obviously. Had a clear stop loss at 11,007K, and this stop loss got literally fucked up instantly after the market decided to go higher. So we're back in the bubbling business. Still the same old thing, nothing can stop that stuff. But still, no regret. It was a speculative scenario. I had a signal. I had a trading risk limitation. We nearly got close to validation. So let's be honest, it was a 15-minute chart trade. And once again, we took a pretty decent trade. We traded right in here, so it wasn't a bad trade. It was a good trade. The thing is that we got close to validation, but didn't nearly made it. So that's the problem. It came close to, which means normally we might have reduced the stop loss, but we just got close to doing it. So I decided not to do it instead because the market was dangerously volatile and stuff like that. But anyway, bullish breakout, stop loss taken down. So yes, we definitely had to trigger this stop loss. I have no regrets regarding this. So just a failure. It happens. That's speculative trading. If you think you're gonna find it all and always in the right thing, you're gonna always catch the top, sell the buy the bottoms and stuff like that. No, sometimes you're gonna just end up being proven wrong. But I wanted to kind of summarize the information just to put you guys back again into an actual risk management perspective. Just because I know when you take a loss, you might easily, and especially for the white guys, the white collars guys, all right, I'm talking about the Discord collars, you can very easily get to think again like a noob, like who's right, who's wrong, because you might be thinking that gains comes with being right and losses comes with being wrong. Yes, but that doesn't nearly even make a good trader or a bad trader. What you want is to learn how speculation works, and you need to get as far as possible from truth to or good trade, bad trade, who's right, who's wrong, and stuff like that. Get the hell out of here. That's not what speculation is about. Speculation is about risk, limitation, period. Just this. All right, so have I done my job? Yes, I just risk limited. The market just decided to go otherwise. We knew this was a bubble. We knew it was very dangerous. This is why we took very tiny position sizing. I took 0.5% capital loss in here. So is that a big of a deal? Not even close to it. 0.5% is just nearly nothing to me. All right. So I would obviously have liked having the opposite direction, like when we squeezed out there. I would definitely have liked to see a huge bearish reactivation like this instead of having a bullish one, but still the market is the market. It does whatever the fuck it wants, and you really need to get used to this. So anyway, it's just a failure, all right? So moving on, I'm taking my stop loss, and I know that stop loss means something went wrong with the scenario because I risk limited and I needed to have some rewards for this. So normally I should have been paid, or I should have been risk limited. So if it didn't show up, means yes, we do have something. So it means we're trending. We're not trending, we're bullish trending, but we know that, right? The problem is we were trading an area in which we should have dampened our expectation, where the bulls should have been less bulls. Now they are even more bulls than they could have been, all right? Look at that, 1 hour chart time frame. We're going to have unfolded boxes again, as the next box is going to be there, and probably the support box will be as well. So we're back in the bubble business. Once again, it's incredible. I can nearly even understand what the fuck is happening, because generally when you get to not understand what the hell you're trading, you just need to zoom out. Just look at this. All right, we're trading in context, but we know that. We know we're trading 4 hour context. All right, which is, we know we're trading a daily context. We knew about that, but now look at this. All right, the problem in here is that we don't have enough history for the weekly context, because right now the weekly context isn't even plotting on this chart, and that's a concern, because we're gonna need to switch to another asset that has more history, and you'll figure out that We were trading. Remember what the scenario was back then? It was pretty much being aggressively searching for bearish reversal out of a daily range context, in which we should have probably failed the daily to retrace down to the support and catching up on some buying entries close to 5.2k or stuff like that. All right, that was the plan. Once again, you can criticize that. You can say, no, it's not going to happen, or no, I don't think. That is just pure subjective analysis. All right? These are indicators. They don't give a shit about what you think about Bitcoin. What they say is that there was high probability for a range, because we rarely go from bearish trend to bullish trend, and especially not after crashing structures. So normally we should have reacted bearish in here, statistically speaking. Still, the market does whatever the fuck it wants. So the bubble wants to go further. Yes, just let it go. It simply means that you need to have a look at the bigger picture. And then if you have a look at this, there you'll understand what I'm talking about. The problem in here is that even the daily charts is just showing us the context of it right now, which means we need to fucking zoom out and get to weekly chart time frame. So let's imagine this. I mean, we went from a year of consolidation, not even a consolidation, it was a crashing structure. We destroyed 85% of valuation, so yes, it is a crash. And after this, what do? Like we didn't even nearly learn the lesson. We get to be even more bullish, and what do? We get straight to resistant context, all right? So we crash and we go resistant context. What does that look like? So everyone thinks, all right, we're back in the business for another bubble. Yes, that's possible. Once again, I don't know. What I can tell is that I told you that there is a parabolic structure with it, all right? That is very, very well visible. And the problem is we've made 3 bubbles. First bubble, consolidation. Second bubble, consolidation. And you can see that time is expanding, all right? So it takes more time before we get to the next bubble. So what I'm going to be doing in here is I'm going to use Fibonacci time extensions. All right, sorry. So what I care about is this. All right, first bullish movement. You can see it's been pretty fast. Been going from 11, 12, something like that, up to 250. So nice bubble. All right, this next one, 76 up to 1,000, and both have been pretty much the same amount of time. All right, so quick movements as well. All right, it's been quick. It's been real quick. Just a few months to multiply asset valuations quite significantly. Then what I care about is how long we took to crash afterwards. And if you take this one, all right, so top to bottom, before we end up building the dip and reactivating, all right, and if we just move it to this dip, which is the next one, right? Sorry, up to the next stop. I'm sorry, I'm just doing some stupid things. So, all right, how longer did it take? That's the question. All right, so we're going to take extensions. So 2 times, far not enough. 6 times. Oh yes, we've been a little bit too far. So let's go 5 times. All right, that's it. All right, so this consolidation, the one that ended up with a crash in 2015, and that ended up building the bottom in 2015, took 5 times longer than the dip we've made to get to 2013 lows. All right. So now put that in motion. All right. Take that 5 times ratio. All right, sorry. So now if I take this one, like we've seen that this cycle, this consolidation, this crashing cycle ended up lasting approximately 5 times longer than what it took for the first consolidation cycle, right? So we rise as fast as we do, but we consolidate longer. What's important is that we've done 2 times, 3 cycles to the upside, and the last one is significantly longer than the previous one. So 5 wave 5 extended, normally termination of a bullish cycle. That's what I said earlier, right? But now we can add some spices to this, because if we do replicate this 5 times timing and taking the 2015 crash length and putting it a 5 times multiplier up to the current market top, that gives us June 2023. So that would give us the low point for this potential consolidation if we had to go through this parabolic or the expanded time structures. right? Meaning that this bubble has been so long compared to the previous one, who just took barely a few weeks. So we took more than weeks to get there. We might have to take more than years to consolidate, all right? Considering that back in the days, the last crash went from December 13, all right, so early 2015. It took a year back then to consolidate. So now everybody thinks that we're done, that we terminated the stuff. Now let me tell you, what if we were just doing some kind of this, like an intermediate consolidation before the worst it will be to come? Could kind of make sense actually, because no one nearly even think about it. But actually it is, all right? We still have the crashing structures and whatever. We could do a double structure crash, in which what we have in here is just an intermediate weekly pullback to get to some more bearishness afterwards. And that will be the ugliest part of it, because the next one will be way longer. Just like if we're just there, all right, we would have just been doing this, and the next step would be all of this, plus the desert crossing phase, plus eventually afterwards, if Bitcoin survives to this, eventually another bullish cycle will set itself. But still, if you forget about this, if you think this is not possible, then let me just tell you what context boxes will say. Because once again, you might trust whatever you want to trust. What you think about Bitcoin is absolutely personal. If you want to get to speculative trading, this is what I'm teaching you out there, right? I'm not teaching you to read the future, and I don't know what the fuck Bitcoin is doing. I don't even care about what it's going to be going. The thing is that I need to trade it. So in order to trade it, either I can gut trade and trade what I think, and hopefully I'll be right. And if I'm wrong, I'm going to take a shitty big loss. So the problem is, I need something that is risk limitation. That's what I do. That's my job. So I'm applying the same risk limitation to Bitcoin, even if it's parabolic, whatever. This is a kind of structure I can trade. I know how to trade them. The thing is that this doesn't nearly fit the reactivation of a bullish trend. We would nearly reactivate this way. More likely, we've probably terminated the five-way structure, which is we probably terminated the bullish impulse, which means we have to extend correction afterwards. So the more we rise like stupid guys like we do right now, the more I tend to believe that this thing will go even lower afterwards. So that's what I think, because not just what I think. Once again, just a few weeks ago, I wasn't nearly even thinking about that. It's just prices, what they do right now. They're ringing quite some bells. Things that I really don't like, because when these kinds of structures are at play, they're not following any technicals. People tend to believe that they're trading what they think. So people get stupid, all right? The structure seems to be stupid, so people think that they don't need to think. They need to just take the brain, put it away, and just buy the dip. And here's the big problem. I need to trade a context. And to me, this context is pretty far from a bullish trend. We've got so many resistances, and we've been crossing them like they were shit. And that's not even the sign of a trend, because yes, if we were trading historical highs, I would agree with that. But the problem is, look at the weekly context boxes. Do you think they're crazy unfolding each other like we do crazy bubblish trending? No, we're not. They are folding each other, which means we're probably in a range context. The problem is, I was trading the daily range context first, because I thought we would never ever get to survive this, and we would never be able to do this, to cross this like it was nothing. But the reality is just in front of me. I never thought it would be. It was very less likely going to happen, but still, it's there. So I need to assess this. I was wrong with the daily scenario, and I don't hide myself. I tried it. I basically took tiny losses. Most of the trade were no losses. I mean, when I traded in here, no loss. The only loss I took is the one I had yesterday. And I think this one, I just done my job. I traded in technical area, who just didn't react it. I got close to validation, which means I would have barely risked 0.1%, but I decided not to reduce that risk, and I took a 0.5% loss. Is that a big of a deal? No. And like I said, I still have my buy and holds that are far more exposed to the upside than the downside. So I'm not losing money right now. What happens overnight, somehow is good. What I don't like is that I don't understand it, I think it's stupid, and I just have to change my overall scenario. And that's really what bothers me, because that doesn't nearly fit what I think. If we were about to build an uptrend, we would have reversed in here, we would have consolidated, and we would have built cycles, upward cycles. The problem is we're going straight line, which means it generally says just one thing: we're in a big, ugly fucking range. And I think the ugly range is just a weekly range. We can go there as fast as we can go there stupid, whatever this is. We are into weekly range context, and the boxes are folding and they give us the range structure. Right? So what's going to happen next is that we're going to have a box in here. Right? We're probably going to reverse the context, which means we're going to probably rise again before the end of this month, and we're going to get a new context box. All right? The thing is that as we will reverse, we're probably going to have bullish context boxes rising. All right, so I'm going to delete that, it's not necessary. And then obviously the support boxes will catch up on the previous lows. So the support box will probably get to build itself like here, which means in time what's probably going to be forecasted is just slowly rising boxes. If we were to reverse in here, like if we build a resistance and reverse, I think we're going to go higher than that. All right, I think we're going to probably go 76% fib. I'll tell you about that later on, right? The thing is that whenever this thing will just start rising slowly, all right, slowly like that, all right? And remember that in ranges, in here we're going to be in a bearish range, which means we're going to break the lows and maintain the highs, which means we're going to have to trade below those boxes. We're going to have to break them down and to break this low. So normally I expect a dip to be bought in the future, later on time. I don't even know, I can't even give you a time scale. All I know is it's got to be long. It's a weekly fucking range. And it probably, we might even go for another set of bearishness. It took us a year for the first cycle. It might be taking us 2 to 3 years for the next one. Just take the example of 2014, all right? This cycle was far less, was far shorter than this one. All right, this one ended up with a longer time decreasing prices and then a long flat period. So if we were just about to replicate such thing just in a bigger time scale period, then this is what it could look like. All right, having some kind of this, right, bearish secondary activation. Right, I'm not saying 1.5K. All right, it's just it's just for you to picture this. We're gonna have to break down this thing. All right, to trade below this thing. Just replicate, all right? It's going to be like that, all right? In here, we're going to have to break below, and we're probably going to have another box in here, and this is where we're going to have to buy, all right? So don't take the numbers, take the psychology behind it, all right? And then, like we see, all right, it reactivates a bit, all right? And it just dies out here, and eventually afterwards, we go rise from ashes. Don't take that for years. It's not necessarily November 24, like we said. We could build a dip out of 2023. So just take that cycle, compress it, and you should find the bottom out there. All right? So if that's what the future, then if you buy in right now, oh man, you're going to suffer quite a pain trade afterwards, because it's going to be a 2 to 3 years pain trade. So imagine what you lived through 2018, how painful that was for most of you guys when you traded bullish in a crashing structure. Then what if you just figured out it's going to be even worse than that the next time if you play the same stupid rules? So you need to have a context. Once again, that doesn't mean I know the future. I don't know. And eventually we could go 200Ks. It's just I need to follow technicals because that's my safety belt into speculation. So I need to have a context to trade. And I don't think we do have a bullish context because this is not a bullish trend. A trend is building accumulation first. We never ever accumulated anything. We're just rising, and that's not how trend gets to work. Even bubbles, they're accumulating first. Remember that the bubbles build a system like that. A bubble, a fifth wave extended, right? The structures of our cryptocurrencies is generally like this. We accumulate strongly, but very sharply. We overlap two supports, and then we get the nice FOMO bubble, all right? The problem is, do you see any of that structure in here? Yes, I do see a tiny structure of accumulation in here. I don't see the pullback, so I don't see the overlap. All I see in here is just a down market rising and rising and rising and rising, and yes, but where is it going to stop? It will stop, obviously. If you think things are unlimited, then you are going to have some problems. Nothing is unlimited in life, and trading is just like life. So it will end, obviously. The question is, how do you risk manage facing this? Because in my personal opinion, you rather like to be cautious right now rather than being fully aggressively thinking that this thing will go up forever and that you're missing the shot. I think we're not even missing the shot. I think we're missing the actual trading plan all by itself. I was eventually a little bit too aggressive, starting to look out for this in a daily resistant context, but apparently we could be going weekly. As anyway, right now we're trading weekly, and that's the last context I have. I will have no monthly context, but the historical tops. So if I get to be proven wrong in here, then this is definitely historical highs, and I'll be wrong about this scenario. But I can tell you something. I'm probably going to sell all my cryptos in this area, like between the 61 and the 76. I'm probably going to sell them all. Probably even the Ethereums or stuff like that. I think, no, probably I'll keep some Ethereums, all right? But these things, I don't think this looks like a trend. So I think, obviously, we're trying to make it look like a trend, but in a range. And when I see people trading and trends in a range, I know there's going to be a lot of money to make. This is the plan, though. All right, so next plan I'm going to be doing. First of all, I've just been invalidated for the daily, so I'm not going to trade right now. Right, last stop is in here. I'm not fighting it. There's eventually a little bit of trade to make, eventually in the 61% area in here, but that's it. But I think the most interesting area is where we do have this. All right, good. We have a target. We've got everything we need. So I'm going to put some volume areas out of these charts oh man, I should have I've done my level analysis. What the fuck? All right. Anyway, so I'm going to use my volume profile. I'm going to be doing this just right now because I have to do it all over again. So we're retracing a bearish trend, which is the reason why we shouldn't be forecasting a bullish trend just right now. That's not how it goes. First of all, we retrace the bearish trend. So we got a lot of resistance in front of us. People don't believe we do, but still we do have quite a lot of resistance. Alright, so where do we have the biggest amount of volume? It's in here. Alright, so 13.6K. That's the minimum price you're going to need to wait for before you even try to sell again. Alright, so that's the first resistance price. We got another cluster in here. Alright, then we've got this one. These are tiny clusters. Alright, the low volume area is in here, which means it is a big and very large selling area. Reason why I don't even believe it worth anything. All right, I think we're gonna just cross those levels. Like they're gonna cause some pullbacks, some tiny pullbacks, or even if we get even crazy bubblisher, then that means we're not even gonna care about them. There we've got the strong low volume area. All right, which means in here we're getting to some strong bearish demand. Then we've got the bearish cluster in here, and I think that's the level I want. All right, that's definitely the level I want to trade. Up to the next low volume and this one. All right, so this is the area I care about. I'm gonna go to the daily chart. All right, so we've got a target right into the weekly chart context. This area very likely, less likely going to reverse, but still it's going to be interesting anyway. But I think this is where the big game will play. Starting from 15K to 17K is a big 2,000 area, in which I'm probably going to sell all my Bitcoin, start to reverse, and that doesn't mean I'll go bearish forever. It just means in here I think it will be necessary to be more bearish than bullish, which means selling all my buy and holds. And if I'm wrong, I'm going to buy them all again on some historical highs or whatever. I can buy again. I just think this area is going to be so dangerous that I wouldn't even be exposed to the bull side at the moment. Alright, so sorry, it was a long one just about Bitcoin, but here's my new scenario as we keep on going. And unless we unexpectedly reverse for I don't know what reason, this is what I'm going to be trading. So patiently waiting for the first resistance area for eventually some speculative trades, but these are going to be very dangerous. And we'll trade them only upon signals and stuff like that, all right? And this is the big area, but like I said, going in here, I'm definitely out of everything about my buy and holds. All right, guys, have a good one. And I have some problem with my throat, so I don't nearly even think it's going to be possible for the scalping today. So probably tomorrow or next week, I'll do as fast as I can, but I just, health comes first.